welcome. I'm Kritika Saxena. I have with me a special guest today, and we are here at the Tata Global Beverages headquarters. Ajoy Misra, the MD and CEO, is joining me today. And what's interesting is we are in the tea lounge. So we're going to talk about that, and I'm going to get Ajoy to explain the room in a bit. But let me start by asking you about one of your flagship products. Tetley is something that has caught investor attention, that has caught consumer attention. And in terms of brand recall value, it has stood out. I read an article somewhere that you have indicated that you're looking at touching $1 billion as far as revenues are concerned in Tetley. What's the revenue base right now, and what is the strategy to be able to grow that, to that figure?
So yes, Tata Tea acquired Tetley in the year 2000. And at that time, it was not only India's, but also Tata Group's largest overseas acquisition. Tetley has been a global brand, has been a brand of trusted tea for over 100 years. And it is indeed a brand that is truly global, because Tetley is available in around 40 countries in the world. The epicenter of the Tetley brand and the business has been in the UK. Tetley is also a big brand in Canada, where it's the #1 market share brand. Many countries of Europe, also Australia. Post-acquisition, we even brought the Tetley brand into India for our premium range of teas, and now we've extended that into green tea under the Tetley brand. So Tetley is indeed a brand that had a global footprint, which we are keen for it to expand further.
Okay.
What are the areas both within existing markets as well as some new geographies, including markets such as India, where the Tetley brand play, whether it be in the green tea part of tea or it be in tea bags, has still not been as extensive a play as we think the market for that brand in India is. So yes, being a global brand, we have an ambition to grow that brand, but not just in tea, which is the traditional hot tea. We are now taking the Tetley brand into beyond black. So with Tetley tea in the UK, we are already into everyday black tea, decaffeinated tea, green tea, and now we've entered the fruit and herbal tea segment, all with the Tetley brand. So Tetley as a brand will extend in the tea category into other subcategories of tea. And already in Canada, we have taken the Tetley brand and gone beyond fruit and herbals and Ayurveda, which we have gone under the Tetley brand. We have recently launched a ready-to-drink Tetley.
This has been piloted in North India already, right?
Yes.
Okay.
So I'll come to that. The ready-to-drink entry of Tata Global Beverages across 3 or 4 key geographies is a whole new thrust. But sticking to the Tetley brand, so Tetley is also taking our ready-to-drink brand of iced tea into Canada and shortly into other markets. So yes, Tetley as a brand with all its extensions is a brand that we are planning to grow and become much bigger than what it is today.
So what's the revenue base right now, and the 1 billion target that you've set for yourself? What's the timeline that you're looking at?
We are hoping we will be able to, with all these additional products that we are coming in, we hope to be able to be there in, I can't give you the exact number because we are not specific on our forward-looking.
Okay. 2 to 3 years is a decent timeline to look at?
A little bit more than that, because some of these are new categories we are entering, and some of the new categories we are entering with pilots, so that we take some learnings and retool so that we go ahead. But yeah, suffice it to say that Tetley as a brand hasn't seen the kind of growth in the past which we are planning to make happen.
You have several smaller brands. You've introduced brands across the water, coffee and tea markets. Are you looking at consolidating this? Are there any brands that you would perhaps look at moving out of? Any exits that that may make sense? Would you look at consolidating the presence across these three segments?
You're right. We do have a portfolio of brands, and that is why it took so many shelves for us to showcase all the brands that we have between tea, coffee, and enhanced waters. Yes. To answer your question, bit of both.
So you will look at consolidating the smaller ones?
Yeah, we have also grown since the year 2000 with a series of acquisitions. Okay. But when it comes to global portfolio of brands, we are indeed at this point looking at a rationalization of our portfolio.
Okay. So how would that work?
As well as brands.
Okay. So how would that work? Let's talk about brands first. How would that work? What are the brands that may make sense to pull out of, and what are the brands that you will look at either merging into a larger or several smaller brands together?
We have stated in the past that we are wanting to rationalize our portfolio of businesses. Yeah. We have said in the past, and we continue to walk that journey, that we would put some of our businesses that are underperforming businesses under a sharp lens. Okay. And we are moving in that direction where underperforming businesses stroke brands that are, it's not easy to change brands and put another brand in that place, because each local brand has a huge affinity with the local market. But if that business is not performing and giving us the kind of returns that we want, we are not afraid to restructure some parts of those businesses.
So which are the businesses and which are the brands?
I wish I could tell you. I mean, so many people in the market would love to know, but I think that as and when it gets consummated, we will be announcing. I think we've announced one exit of one business, but that wasn't a branded business. That was in China. We had a B2B business. We made an announcement some months back to SEBI, as well as it came out in the media, that we are pulling out of that business. So it's an indication of the fact that Tata Global Beverages wants to move on aggressively for growth, but profitably. And if a business is not going to give that, we will put it under a severe lens.
Okay. I want to ask you which those products are, I understand, but these would be largely via stake sales, bringing in a buyer. What is the kind of cost effectiveness that will come in? If you could give me a sense of the kind of cost effectiveness, margin benefit that you would get as a result of this, based on the strategy that you have looked at.
I'm afraid I won't be able to share numbers, but I can certainly say that we are very conscious that we want to bring margin efficiency overall into the company, and that we want to bring in financial efficiency in our metrics with which the market evaluates, and therefore we evaluate going forward. Growth will have to come profitably. That's the broad theme. And as and when we do have specifics, love to share it.
Okay.
But yes, we have an appetite for growth.
Okay, fair enough. Another thing that investors have looked for is you have two aspects of your business. One is brands and one is the commodities aspect as well. Would it make sense, since we're talking about rationalization and optimizing the growth areas, would it make sense then to look at demerging these two into separate areas, into separate businesses, and then growing them?
Yes, so in a way, Tata Tea has done that. Tata Tea used to be a plantation company. Some years back, we decided to move out of plantations business and become a branded business company. So we exited from North India and from South India and floated them as two separate plantation companies where we intended to sell maximum possible shares to workers and officers of the plantation, and which is how we divested ourselves, though we continue some amount of equity in it so that we are able to keep supporting the communities. So we have moved out of that in that sense.
Okay.
The only other non-branded business that we have is largely with Tata Coffee Limited, which is a subsidiary of TGB, but it's also a publicly listed company. So Tata Coffee Limited has all the coffee plantation business. It also has some tea plantations and the B2B part of the business. So actually, a large part of the non-branded business is the large part we have moved out of. We do have some left in the parent company.
Yeah.
The China business that I talked about, which was a B2B, which is either therefore non-branded instant tea producing unit. We have decided to pull out of that.
Yeah.
But we still therefore retain the larger part of instant tea B2B business. That's about the only part that
because
still
it complements to your brand business.
Because it is an instant tea extraction company. And similarly, by the way, even Tata Coffee Limited inputs into our branded coffee play that we've entered into in India. The Tata Coffee brand that we've launched in India for coffee, all the coffee and formulation is supplied by Tata Coffee Limited. So that's how we get them to play for us. Otherwise, it's a separate company.